But when you get that detached or semi-detached single family, that I think is the new gold going into the future. And that's what we're doing as real estate investors.
Every indicator is showing us we are near the bottom. I'm not saying we're at the bottom. I'm saying we're near the bottom. And it's a great time if you have a 5-year, 10-year, 15-year outlook. It is a phenomenal time to get into real estate. So Patrick, here's a great topic, great chart that that you and I went through, which shows you the home prices versus income. It also shows you, and what I like specifically about the chart is some of the sideways momentum and some of the pullback that have happened over the years, and kind of why we're bullish on real estate as it continues. Tell me a bit about this chart from your perspective, and then I got a couple other things I want to inject into this.
Well, JG, as you know, I've been in this real estate market for 25 years. So when I went and I looked at this particular chart, it became apparent to me that I looked at those times that are circled, and they're estimates, it's within that range where the market pulled back a little bit. It slowed down, it pulled back, prices came down, things slowed down, and people just shut down. They freaked out. There was all sorts of controversy around what was happening in the housing market, and they added tax, and it was, especially when we were seeing what was going on in BC, they were trying to slow it down, and it was foreign buyers tax, and then it was what we call jealousy tax. They were adding taxes all over the place, and of course, it was slowing down the market. But here's the reality of it: is through those times, everybody, or not everybody, many stepped to the sidelines. We've been talking a lot about that even right now, is everybody stands on the sidelines going, oh my gosh, if the world's coming to an end. All we have to do is kind of step back, expand our view, and we start to realize that every pullback was then, followed by an increase. And then we look at it and we go, well, how come we didn't see that at the time? And damn it, next time the market pulls back, I'm going to jump in. And then market sentiment, then fear kicks in, then the story kicks in, and you stand on the sidelines. But what's interesting, I think, about this, and we don't talk about it enough, but when we look at the Bank of Canada, the feds in the US, what is everybody talking about? 2% inflation. We are committed to 2% inflation. Now, if you were to extrapolate that over this many years, you would realize that it's always more than 2%, although they're committed and they make it look like 2%. They have told us, our government and our central bank is telling us almost daily, 2%, 2%. So if I'm looking at inflation at 2% and I look at housing, I know that housing is only going to go up because they told us it is, because it's 2% inflation. That's worst case.
That's what they're saying. That is what they're saying.
Telling us that. And on top of that, think about the politics of this. Now you look at what Canada, 41 million people now, you look at the number of homeowners that are out there, the number of boomers that own homes. Do you think for a second, and the number of mortgages that the banks hold, JG, I mean, they're putting reserve funds for the third or fourth time, whatever the story is, because they think it might pull back, things are going to go upside down, blah, blah, blah. Here's my point. Do you think for a second that any government or any central bank wants housing prices to come down? Think about that.
No.
They don't want them to come down, especially for an extended period of time. So as much as we're seeing all of this shit happening, I'm looking at it going, number one, they tell us it's 2%. Number two, from a politics over policy, which is their pattern, they're going to choose politics over policy always. They can't. They can't. They'll lose votes. And then imagine the net worth that gets wiped out of the population. So they're kind of talking out both sides of their mouth. And then, of course, the central bank, when you look at what the Bank of Canada's got to do, in Canada's case, we got at least 5 major banks, plus the B lenders, C lenders, blah, blah, blah. They can't afford for prices to drop dramatically. Anyways, that's just my view of it. And I'm looking at it kind of, when I step back from this and we look at population growth, we look at jobs, we look at all those things. Got it. Economic fundamentals matter. We got to look at those key drivers. We got to consider the influencers. None of that changes. But on top of that, we have to add one kind of component that we often or have not been adding in a real kind of forthright way, and that is government and Bank of Canada does not want our real estate prices to come down.
100%, Patrick. A large chunk, not a large chunk, the majority of people's wealth, and I'm not just talking about real estate investors, the average Canadian, the bulk of their wealth is kept in some version of real estate, because it's not just people that own real estate, Patrick. It's not just the homeowners and the landlords and the property owners. It's not just them. It's all of the other investments that plow into the mortgages, right? Because don't forget who holds those mortgages. Those are all mortgage-backed securities, which means somebody may not necessarily be directly impacted by real estate. That's it. They don't own a home. But if they have some mutual funds, some of that money is definitely in mortgage-backed securities, which means it's all tied to it. And we saw when it goes wrong in the States there in 2007, 2008, how fast it can unravel. But the point, that's why they came in and saved the day, because you can't let that market unravel. Too much of people's wealth's in it. It's just impossible. So they won't let it unravel. That's for sure.
That's how I see it. And when we look at right now, when we look at this circle in 2024, the pullback, real estate's coming to an end. I mean, the headlines, the narrative that is out there by many in the real estate market, oh, this was inevitable. Of course, it's going to crash 40, 50%. Yeah, we're definitely off peaks. But when you look at even this particular chart, we're not way back to 2015, 16, 17, 18 numbers. I mean, we pulled back, and those are pullbacks in key markets, for example, like Toronto, which is driven by a condo market that's upside down. So it's a particular sector and a particular property style. Right now, JG, and we've said this, and I will say it again for the REIN community, single family real estate, and I mean single family as in 5 units or less, is the new gold. It is a rare asset, and they're not building any more of it, it seems, or very little of it. So for those of you who are still investing and continue to invest in real estate, we look at what's happening in the market right now, shift your strategy, get that ADU or 2, whatever it is on that particular property. But when you get that detached or semi-detached single family, that I think is the new gold going into the future. And that's what we're doing as real estate investors.
I think you're bang on, Patrick. I mean, I know that's been part of my strategy for sure for the last 15 years. And I just did some quick research there during your last segment, which is 76% of Canadians' net worth is tied into real estate. And if you include the mortgage-backed securities in the markets and the secondary markets, it's up to 85%, Patrick. 85%. So you always say that a huge part of our GDP, and I believe for a while there it was like 12, 13%. I think now they got it down to, I forget, is it 8% of the GDP is essentially associated to real estate, which is a ton of our GDP. But 85% of the people's wealth, including those politicians, by the way, their wealth too. So this thing ain't going anywhere. It's going to go sideways. It has been going sideways for a little bit, but that's the end of that. And I think that, and it's funny, one of the real estate agents that I work closely with, she has her own analysis, as do many agents. And in her analysis, she was saying that she figures August was, because of the recent price drops and the activity that's now starting to spur up on the market, she thinks August was in fact the bottom of the price, the bottom of the pricing in her particular market, which is in the Durham region, Clarington region, just south of Peterborough, which I find interesting. So, and Patrick, that's something you and I, and that's a tactic that real estate investors, and we've been saying this for years, is investors should never try to time the bottom of the market. It's so hard and next to impossible to time the bottom of the market. But I tell you, every indicator is showing us we are near the bottom. I'm not saying we're at the bottom. I'm saying we're near the bottom, and it's a great time. If you have a 5-year, 10-year, 15-year outlook, it is a phenomenal time to get into real estate.
You can't be more right. If you're going to get into real estate and you have a long-term view of what's going on, and again, being very specific about property types, as in ADU, minimum, duplex, triplex, that kind of thing, and detached, semi-detached, you have got a future in the world of real estate, just given the nature of what is going on economically. Now, here's the thing about what you said about timing the bottom of the market. Different markets, what's happening regionally is going to say, okay, well, is this the bottom? I don't know. But what is happening in all of this, JG, is deals are there. Motivated sellers, motivated vendors want to get from underneath projects. And so there is opportunities for buying. It's not like you're walking down the street picking them up. If you dig for them, they're 100% there. And I think that's where investors got to really pay attention to what's going on. And if you got a long-term view, you're going to do absolutely fine. Buy for cash flow, follow the system, follow the process. Don't speculate, and you're going to do just fine in the world of real estate, given what's going on.
I want to say one last thing about this, Patrick, before we end this segment, which is you talked about inflation at 2%, which pretty much pegs where you know the long-term average is going to be of real estate. What a lot of real estate investors don't realize, and you and I know this, and those that have run the numbers know this, is for real estate to do extremely well for you, your real estate should inflate somewhere between 1% to 3% per year, and you're going to kill it in real estate. That's it, just 1% to 3% per year. You don't need 10, you don't need 50, you don't need 20% crazy, inflation in real estate. Just 1% to 3%, and the Bank of Canada is telling you it's going to be at least 2%, which is a no-brainer, Patrick.
Yeah, and I don't remember the exact thing, but 2 or 3% over the course of the year with leveraged money with 20% down translates to about 14% ROI. So that's a quick math rule of thumb. It's pretty accurate, 2-3%, and that's with no cash flow, by the way. So not a bad ROI.
What a fantastic ROI. What do you mean not a bad ROI? Warren Buffett, the greatest investor of all time, has been averaging over the course of his 120-year career. It seems like he's been doing it forever. Has been averaging under 22%, Patrick. And if you can get 14, 15% and keep that consistent, you're going to do extremely, extremely well. There's no doubt about that.
Here's what we know about this economy right now. Yes, there's headwinds. There's lots of riptides kind of under the surface that are going on. As long as you're paying attention, you're going to be fine. This too shall pass. Will there be some pain along the way? 100%. When we look at the construction industry, what we're already hearing about is many construction jobs. Those guys are sitting on the couch or at the union hall going, okay, if we got some work, particularly when we look at what's happening in BC and Toronto specifically, those builders are shut down. And on top of it, of course, there's at least 30 now developers that have gone insolvent and or bankrupt. That's going to continue. Where we're hearing projects in Vancouver, developers are going bankrupt. There's not there's no pain and it's not easy, but as investors, if we can just get out of the fray, look at what really is happening, put our capital to work in the right asset class, do it strategically, there's still such huge opportunities going on right across the country.
100%.
Hey, so JG, what do you think? These aren't rose-colored, but those are pretty rose-colored glasses, don't you think?
Those are some good rose-colored statements you're making there. I think I don't know what you had for breakfast, Patrick, but I kind of like it.
I'm a little dovish today. I'm me and Tiff.
Yeah. It must be you must have got a mortgage renew at a lower rate or something. That must be what's powering this. I don't know.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below. Follow those links.